My name is Cornel Dixon. I'm the head of growth at a company called Plumery. So Plumery is a digital banking platform company based out of the Netherlands, Amsterdam. Digital banking can mean a lot of things for us. We provide what's called the digital success fabric. And ultimately, we've basically seen through our experiences working at large enterprise companies, banks are sick of being locked in to basically the vendor's way of doing things or the vendor's roadmap or maybe even the vendor's partners. So we've built the platform to basically be the platform of freedom so that customers can take the capabilities that we have, what we call buy, and then free to basically build and differentiate on top. The freedom to actually reflect their brand and reflect their customers. My job is pretty simple. It's to help grow the company and to also help grow our customers. So how can we make sure that our platform hits all the right metrics, right? So how do we get customers through the door? How do we make sure they're happy? How do we make sure they keep buying products and stay there? Ultimately, I want to make sure that all of those metrics tie back into the platform and tie back into our customers. Fantastic one given we're in Saudi, and obviously Vision 2030 has been around for a long time, and that is a really nice strategic impetus for change. But on top of that, it's not just the top-down direction, it's actually the bottom-up. There's a very youthful, vibrant, digitally hungry population here that basically expect things to be done a lot more effortlessly and easily on their mobile phones, on their laptops, or whatever it might be, through Alexa and other kind of AI chat agents. So we see that that's a really nice combination that ultimately means that we can help customers to deliver on those promises. And what I've seen a lot is that there's a very ambitious vision throughout Saudi and throughout the Middle East, which basically means, hey, we want to have the best-in-class experience, and we don't want to necessarily be locked into, widget A or widget B that a potential provider can offer. And we want to offer that freedom to really, truly reflect the dynamic spirits and ultimately branding of the banks that are here, and to make sure that they can be there and evolve with their client base, because it's not so much a rip and replace. We've talked about this before. That's going the way of the dodo. It's about how we can essentially create, a living, breathing platform that adapts with the changing market and also adapts with the changing needs of the client together. Yeah, it's not something I think that's unique to the Middle East. It's a common issue or a challenge that I would say most global banks have. We were talking about just watching Brett King before, and he was also talking about the death of the branch globally, right? So it's not something that just happens in one country. What we're seeing is there's a move from monoliths to motion. I just talked about having that living, breathing platform that can adapt to the needs. I think that's something that's fundamental to survive and thrive in the future. To be able to grow at scale, to be able to capture customers, in the millions, tens of millions, and not just in the thousands or tens of thousands, you're going to need something that can move at that speed. So those rip and replace programs, the traditional modern way of looking, or classic way of looking, at technology of we move from monolith A to monolith B, it's going to go away. It already is. And on top of that, we're also seeing that risk, or the perception of risk around digital, is changing. So it used to be that, going, best of suite and really fully integrated end to end, that was the way to go, it was the less risky maneuver. Well, actually history has borne out that it's actually quite a risky way of doing things, because if something goes wrong, it's a single point of failure. So being able to more adequately address the risks and challenges that come with digital and to make decisions quickly, that's something that needs to change and is already changing. And I think in the next 3 to 5 years, we're going to see that. We've already seen the numbers from Nubank and from Revolut, right? What other bank can say that in 10 years they've captured, 150 million customers for Nubank and 450 million for WeBank in China? Yeah, good luck doing that with a very laborious and monolithic kind of procedure and risk management process as well. It's impossible. Yes and no. I think it's a bit of a false dichotomy, right? To say it has to be one or it has to be the other. I mean, ultimately, it's going to be a bit of both. Do younger people expect to go to their banker to move their money and to check their balances? Absolutely not. I mean, nowhere in the world is that really something that people actually want. So we're going to be moving away from that, and that's the new normal. When it comes to more complex financial advice, obviously there's agents and AI that's coming into the picture, but ultimately the accountability, and if you look at it from a regulatory perspective, both with SAMA here and elsewhere, where is that accountability going to rest? It's probably still going to be with a person. So most people, I think, don't want to entrust their extremely large financial decisions and potentially risky financial decisions purely to a machine or purely to self-service. A classic example is, buying a house or any other large asset class, or, even moving hundreds of millions of dollars. Yeah, you probably want to take some advice from somebody or have that double checked and have that rubber stamp before you move on. So it's going to be a more of a symbiosis. Does that mean branches will be here to stay? No, not necessarily, but the way that they serve their customers will adapt, right? So it's going to be more of a service center versus, a transactional center, which essentially, and we've talked about it before, it brings it back to the original way branches actually used to operate back in the day before we had digital, right? They were a place where people knew who you were and would be able to help you and offer you real financial advice. So I think the combination of digital plus that physical aspect, that human touch, whether it's remote or in person, it doesn't matter. I think that's ultimately where it's going to be. It's not going to be one or the other. It's going to be an and, not an all. Because ultimately it has to be both. I know if my son's 18 months old, so there's absolutely no way he knows anything about ChatGPT or Gemini yet, but he's going to be growing up with those things. And, the people that I know who have children who are 10, 11, 12, 13, 14, 15, they all know technology very, very well. And even though they like AI, they're still quite skeptical, I would say, a lot of these younger people, probably more so than people in my age cohorts, in that sort of 30 to 40 age range. So I'm quite curious to see how people who actually grow up natively with this technology, how they will actually develop and what technology will mean for them. I think it's a bit too early to tell at this moment. The approach to digital, it's not a nice to have, it's a must have, right? I think that's the first. We've seen it everywhere today. There's very few. 10 years ago, there were lots of physical POS devices, lots of hardware. I've hardly seen them at all today, or at least in the last editions. So I think digital is it's ubiquitous nowadays. And on top of that, the decision making around who the right partner is, right? It's no longer in a fully end-to-end move from A to B. It is about finding the right partners to help you at all parts of that value chain. And there are so many great partners out here today at Money 2020. And, how you select them, you have to select them quicker. You have to select them with the right level of due diligence, because oftentimes by the time you've gone through a 9-12 month selection process for a technology, the goalposts have moved. So finding that balance, I think, is going to be a challenge for internal compliance and risk teams moving forward. But they're also adapting with the times. And one great thing is, we're a cloud platform, right? So we love our partners at AWS, at GCP, and at Azure. And what we're seeing is that globally, including here in Saudi Arabia, it's cloud is not something that, could be done. It's moving more towards something that should be done. How, I think, obviously different is different based on the local requirements, but ultimately it's going to be here. There's no choice anymore, right? It's digital has to be done. It's and it's work. Massively important. I think we are building a platform that essentially gives freedom to our customers. So what we've seen is, and I've worked at these companies in the past, there's vendor lock-in, and that comes from technology, it comes from their roadmap, it can also come from who actually does the implementing, right? We strongly believe that clients should have the choice, a bank should have the choice of using their own great people in-house with minimal training, or using great partners that understand the technology locally. It's something that's very important to us because we don't have all the answers, right? We know what great technology looks like, but that doesn't mean we know what great experiences look like locally. What somebody experiences here in Riyadh and expects here in Riyadh versus in Amsterdam where we're based, sure, there are some common patterns, but that 20% is something that we really want partners to help us with. And that's both on the technology side. So, we're partnering with great KYC IDV partners who have all the local compliance and data sets, as well as local core banking, whether it's the more modern cloud core banking providers that we partner with, or the more traditional ones. Super important to have that in place so that we can accelerate it. I've seen it before. 4 years to launch a mobile app is just absolutely ludicrous. Like it is ludicrous. That should be a sub 12 months, sub 6 months journey. So anything we can do to accelerate that technically is key. And then on the other side, it's about people. So having the people on the ground through our partners and through our customers who understand their target base, understand their customers and what they want. It's something that we're doing already in North America, where we are fine-tuning our model to make sure that it is fit for purpose with local partners. And it's something that we really want to do here as well in the Middle East and any other key market for us, because we don't have all the answers, but we do have great technology. Growth is in the title and growth is in the name of the game. So we're looking to accelerate both our team. So we already have a fantastic team, but there's lots to do. So we also want to make sure that as we grow those people, we pick people that can essentially build out our platform in the best way possible. Ideally, those who also really have that culture and that spirit that our founding team has had. We've all grown up in large enterprise fintechs. We've seen what works well, and we've seen what really doesn't work well. And we want to be change makers, and we want to, shake things up a little bit. Let's put it that way. So this is a call. Sorry, I'm speaking directly to the camera, but this is a call for anybody who has that spirit and wants to shake things up. Give me a call. And then on top of that, it's about expanding our global outreach and footprint. So we've done a really great job in the last 6 to 12 months of consolidating our European customer base, expanding into North America with our partners there. Obviously, I'm here at Money 2020 in Riyadh because we want to do the same thing in the Middle East, in Riyadh as well as in the greater GCC. So for that, we need to have a very strong partner network because, like I said before, we have great technology, but that doesn't mean we know exactly how it should be done in Saudi Arabia, for example. And then the last part is actually continuing to develop an innovative pace. We've seen that, this year, for example, we've launched our digital lending proposition, our lifestyle banking proposition. We've started regionalizing for North America, for example. We want to keep that pace and that spirit of innovation. So the next 12, 18 months, it's about consolidating our product scope, let's put it that way, and as well as finding those innovations that we can bring to market, either ourselves or through partners, to really differentiate and add a little bit of secret sauce to what we do. So that's ultimately it for the next 12, 18 months.